holidays. As we all know, it's been a crazy 6 months or more. I don't even know how long has it been, 6 months already or more. But I think we're hopefully starting to see some light at the end of the tunnel. The vaccines are starting to be distributed, maybe not as fast as we would like, but definitely a sign in the right direction. And at the same time, I hope that, all of our businesses, including Regis, we're starting to see an uptick, not as strong as I would like, but we're definitely starting to see an uptick in some hiring, new clients and so forth. So no doubt it's been a challenge, but, I really want to thank, first of all our clients. We wouldn't be here without you guys. We appreciate your support during this very difficult time. I hope that we've helped you also through this difficult time. And through this new presentation, there's some new things coming out that, I know Carlos and Joe are going to present, and we hope that, it helps you as well. So, without further ado, I want to again welcome Carlos and Joe, who put together this presentation on a new round of PPP, and other topics that we're going to discuss. We've also decided that we're going to start doing quarterly webinars with Carlos and Joe, and address different topics, but of course we'll announce that later on and set a schedule way ahead of time. Because I think, especially with a new administration coming into office, there's going to be a lot of changes going forward, and we want to make sure that you guys are well aware of them and on top of them and so forth. So I want to also really quickly thank my incredible Regis team. I know has worked endless hours and helping you guys get through this, and I appreciate everything they've done and so forth. And we look forward to a great year, hopefully a brighter year. I know a lot has gone on both politically and so forth. So, hopefully everything will calm down. Our businesses will continue to grow and we'll continue to remain safe. So again, thank you to everybody. If there's anything we can ever do, guys, my cell number is 305-525-9271. I'm always here. I know my team is always here, and Carlos and Joe are always available to help you as well. And again, like I said, I'm confident that 2021 is going to be a brighter year for all of us. So again, Carlos, Joe, thank you very much, and go for it. I think, well, George, I think we're going to talk about any questions and how we're going to handle questions and so forth.
Yeah, as for those of you who have been in the calls in the past, the best thing to do, and I think it's worked very efficiently, is to go ahead and ask any questions you might have in the chat room or on the chat window at the bottom of your screen. If you're using the full screen presentation, at the bottom of the screen, there's a little chat icon. Just go ahead and click on that, type in your question, and Carlos and Joe will get to those questions at the end of the presentation. If you want to ask something else and you didn't remember during the presentation, or a question comes up afterwards, as always, feel free to email us and we will get back to you with an answer. And then, of course, always, I think most people are automatically muted when they come in, but just try to be sure your microphone is muted to avoid as much background noise as possible. Thanks again, everybody, for joining. And Carlos and Joe, the floor is yours.
Thank you so much. Thank you, Carlos Rodriguez and George Rodriguez and the entire Regis HR team. I think I say this in past webinars, I think what you're doing here is spectacular. And I hope everybody that's attending gets great value out of it. So thank you, Regis. Thank you for the entire HR team, and we look forward to working with you. So let's get right at it. As you know, the country's been through a lot of changes, and it's been a while since the CARES Act, which was the founding act for the first round of PPP loans. So what we're going to talk about today is some good news, and that is under the Economic Aid Act, which is distinct from the CARES Act. This is what they're calling it, the Economic Aid Act. It piggybacks on the CARES Act first round of loans, and now provides for a second draw of loans for those small businesses that qualify. So we're going to go through that as the initial part of the presentation. At the end, what we'll do is piggyback and bring in some miscellaneous issues that we understand a lot of the Regis clients would like to talk about. So let's start with the Economic Aid Act, which is meant to provide, I guess, a glimmer of hope for businesses as you strive to get through COVID-19 and get through these trying times in the coming months. So we broke this out in two parts, as I just stated. It's going to be the second draw. Part one will be the second draw on PPP changes under the Economic Aid Act, and the second part will be miscellaneous updates, and we'll conclude with the chat room on some questions and answers, as George stated earlier. So the Economic Aid Act was enacted on December 27th, 2021. It was meant to help hard-hit small businesses, nonprofits, and venues, specifically to deal with the economic turmoil that they've dealt with for the last several months as a result of the COVID-19. No question about it. This is helpful, and a lot of businesses want to take advantage of it. However, surprisingly, the act did come out with some limitations that might exclude several businesses and may actually make this a little bit more did make it a bit more targeted. Section 311 of the Economic Aid Act, it's an act that had various purposes, but this deals with the second round of payments, second round of loans. It creates the opportunity for small businesses to get a second draw of PPP loans, forgivable loans, assuming you satisfy conditions to help cover expenses. Now, under the first round of webinars that we did earlier, we went through the whole forgiveness analysis. You will see throughout this presentation that the government decided to piggyback on a lot of what happened during the CARES Act. So the forgiveness procedures generally are going to be the same, which is good. So we'll get into now the focus of this act and the Economic Aid Act and the interim rules that just came out recently are to explain who qualifies, how you calculate and determine whether or not you qualify and how much you can get. On the forgiveness side, you see they piggyback a lot on the CARES Act. Now you must apply for this second round of financing by March 31st, 2021. I suspect that you'll be hearing from your banks soon. My understanding is right now they're working with the SBA on coming up with their respective programs. So this PPP loan program, we'll call it the second draw program, actually is more favorable to small businesses, even though it's more limited on who qualifies. The intention is to provide expeditious relief to America's small businesses. Now, it's one, as I said earlier, there are multi-purposes in the act. So if you want to know about different targeted purposes of it, the act is very lengthy, thousands of pages, but what we're focusing today on is the second draw PPP loans under the act. Guaranteed by the Small Business Administration under the same terms, conditions, and processes as the first PPP loans, and we'll get into a few of those similarities now. Now, remember, the purpose of this is to help small businesses, but like the first loan, this second draw loan is also forgivable, just like the first loan, assuming you qualify under the respective conditions. What is similar with the Economic Aid Act second draw loans compared to the first draw? 100% guaranteed. No collateral will be required. No personal guarantees. The interest rate will be 1%, calculated on non-compounding, non-adjustable basis. The maturity is 5 years, and all loans will be processed by lenders under their delegated authority, and they will be permitted to rely on borrower certifications, very similar to the CARES Act under the first loan. The SBA gave lenders quite a bit of flexibility in dealing with these loans and the forgivable component to them. So the key document that came out, and that's what we're basing this presentation on, is something called the interim final rules that just came out recently. And they address changes in the second round compared to the first round with some additional information. Now, what they specifically stated in these interim final rules, which we'll refer to as the IFR, is that the consolidated PPP IFR frequently asked questions and other guidance under the SBA, under the SBA for the Small Business Act under the first loan applies to the second draw loans, except as specified in this IFR. We're going to get into some differences that we're talking about now. Now, the SBA is expected to come out with further FAQs. So we have the old FAQs. We have everything under the first draw loans, which are very authoritative and something that you want to keep in mind, but they are expected as quickly as possible, have not come out yet, to come out with some additional FAQs to customize the second loan with a lot of the requirements of the first loan. Now, what did they do? They expanded who is eligible for a PPP loan with several additional categories. Several special categories of businesses added or clarified are the following: seasonal employers, news organizations, housing cooperative, 501c6 organizations, destination marketing organizations, and small business debtors in bankruptcy. They expanded it based on the first loan for the CARES Act. Who is eligible? Now, this is the crux of what you've probably been reading a lot in the papers. What qualifies you for this second round of loans? It's available to a smaller group. You remember under the CARES Act, you had to have at least 500 employees or below, 500 employees or below, not above 500 employees. Now it's 300 or fewer employees, not 500 or fewer employees. So you can see that any employers between 300 and 500 that were above 300 are now excluded from this automatically. Generally, this is a key issue. From a financial standpoint, there's a key revenue reduction threshold that you need to meet to qualify for the second draw PPP loans. There must be a revenue reduction of 25% or greater in any given quarter in 2020 relative to the corresponding quarter of 2019. So if you had profit, or you did not lose money on the first, third, and fourth quarter, but you did have in the second quarter in 2020 compared to 2019 more, at least 25% or more of a reduction in gross receipts, you can qualify.
And let me clarify something, because I believe we sent out a newsletter that and we're gonna send out a correction, by the way. But it is the 4 quarters in 2019. You can use any of the 4 quarters.
Any of the 4 quarters. That's right.
Right.
Carlos, there may have been some confusion out there around the country, because when they issued the act, when the act actually came out, it was in December, and that fourth quarter had not yet been completed.
Correct.
Since then, the IFR clarified that it is all 4 quarters.
Correct. So we'll send an updated newsletter, but it is the 4 quarters in 2019. You can use any of those 4 quarters.
That's correct.
Okay.
And all you need to do is satisfy one of those 4 quarters to satisfy this reduction in gross receipts threshold.
Of 25%, correct.
That's right. 25% or greater. Now, you must, in order to qualify for this second round, you must have used all of the proceeds of the first PPP loan. But final forgiveness on the first round of PPP loans is not a requirement. Another issue that has come up is, can I apply for the first, if I didn't apply for the first PPP loan and I was in existence in 2019, can I apply to the second round of PPP loans? The answer is no. If you didn't apply for the first round of PPP loans, you're not eligible for the second round of PPP loans.
But you can still apply for a new first-time PPP loan. So you can get first draw under all the regular first draw requirements until March 31st.
All right. So a business entity that is, now this is an interesting development, because this PPP loan became much more favorable than the first PPP loan for those that have an NICS code beginning with 72. And we're focusing now on hotels and restaurants. You will see as we go through this presentation that the economic benefits from this PPP loan, that the actual maximum amount that can be provided and that could be forgivable, assuming conditions are satisfied, is greater for those that have an NICS code beginning with 72. Now, it still applies that you have to have 300 employees or less per physical location to be eligible to participate. Same affiliations rules apply to the second draw loans as they did with the first draw loans, except as provided in the IFR. However, so the main difference you got to look at from an NICS code beginning with 72 is that when you do a per location by location assessment, you know that each location has to have a different EIN number. But when you do a per location, it's not 500 or less, it's 300 or less, and the same affiliation rules do still apply. There are entities that are prohibited from actually the second draw. Those involved in political lobbying, certain affiliations with the People's Republic of China, people required to register as foreign agents, permanently closed businesses. So if you closed in 2009 and 20, you're not eligible for the second round of PPP loans. Businesses eligible to receive the first draw PPP loan and other categories. Okay. What is available? Now, this is going to be interesting because it does have a different amount calculated depending on some industries that you're in compared to the first. And some of them will be the same. The second draw, as you know, is available to a smaller group. We talked about 300 or fewer employers. And you need to consult because you may be in a specific category that is either exempt or that is either not permitted to be drawn on a loan or that is excluded specifically. Consult with, of course, your consultants, and because you may need legal advice to cater to your specific circumstance. So generally, it's 2.5 times your monthly payroll amount, similar to the first PPP loan. It could be using the same numbers as 2019 or 2020. You can also use 2020. They're allowing you to go back to 2019, and they're opening it up now to 2020. We'll get into some details now in a second, but you will see that when you apply to a lender, if you decide to rely on your 2019 numbers that you used for the first round of PPP loans, then you do not need to provide additional documentation to substantiate that. The lenders should rely on your 2019 numbers. If you go into 2020, we'll talk about that later, then of course they're going to want some additional documentation. Now, the IFR provides for specific methods to calculate the maximum payroll amount, and it does depend on your choice of entity or business. So when we talk about 2.5 times your monthly payroll amount, how do you calculate your monthly payroll amount? If you're self-employed with employees versus self-employed without employees, you're a partnership, you're seasonal employees, speak to your CPA and consultants, because the assessment of the amount that you're going to get may be different. The actual substantive proof of that may be different because you have different tax classifications, different tax documentation. And we're going to get into that in a separate section about some basic documentation they need to provide. But depending on your choice of entity, that's going to be key on how you substantiate your maximum payroll amount. Now, the total loan amount is capped here. It's $2 million. You cannot go beyond $2 million. In the CARES Act, in the first draw, it was $10 million, the cap in the first loan. Now, this is a big change. If you're in the hotel industry, in the restaurant industry, your NICS code beginning with 72, you can actually get up to 3.5 times the monthly payroll amount, not 2.5 times, which applies to the other qualified borrowers. Now, you're still capped at the $2 million. In addition to that, those that are part of a single corporate group are capped now at $4 million for the second draw of PPP loans. So they are reducing the maximum amount that you're allowed to get as a borrower. But for hotels, restaurants, and those with NICS code 72, you actually have 3.5 times the payroll amount, which is a lot bigger, 3.5 months of payroll cost, as opposed to 2.5 months under the CARES Act and the first loan. I'm going to turn it over to Joe now, who's going to talk a little bit about the reduced documentation requirements and some other documentation requirements, and we'll lead into concluding on some final points in a second.
Okay, generally, the government has been pretty good here. They have decided to try and cut down on the amount of documentation needed to get this second draw PPP loan. You are still required to substantiate your payroll cost calculations in generally the same way that you did originally as part of the first draw PPP loans. But interestingly enough, if you want to use that same exact calculation, i.e. 2019 average payroll, you won't have to submit any more documents. Granted, you may want to look at 2020, maybe your payroll went up a little bit, and maybe you'd rather use that because it can get you a higher multiple and a higher loan amount. But either way, there's no need to provide new documents, assuming you go back with the same lender. Now, also for loans under $150,000, you don't actually have to provide any documentation at the time of application to substantiate that your business revenues went down 25%. So that could be a huge thing for small businesses. If your loan is less than 150, you almost don't have to give any new document, and you can get away with a very short application with no supporting information. Now, for businesses who seek loans over 150,000, you are required to substantiate at least the drop in revenues. Since that is a new requirement, you have to substantiate it. The IFR specifically says that you can do that by including tax forms, annual tax forms, quarterly financial statements, or bank statements. So there's some flexibility there. I'm sure that will be flushed out a little bit more down the line, but they already intended that it's going to be pretty broad, the information that they're going to accept for that.
And I'll add on to that the IFR even gets so specific that it says that lenders should work with the actual borrower if there's a mistake or they have a question. They need to work in good faith to resolve and deal with these issues involving a 25% reduction and so forth. It's not surprising that the government at this stage of COVID-19 wanted to simplify the documentation requirements. You all could recall that under the first draw loans under the CARES Act, it was a bit more cumbersome for the banks to get organized and provide the actual summary of what you needed to produce and how you needed to introduce it. Now it's actually so streamlined that if you're relying on 2019, they can go straight towards the actual fulfilling of the documentation requirements. Now the banks need to work in good faith. The government wants them to move this quickly. So it wouldn't surprise us that this round of proof of payroll costs and 25% reduction is hopefully a little bit more palatable and manageable for clients and for borrowers. Okay,
moving along. We noted earlier that the changes in the new Economic Aid Act actually affect both the first draw loans and the second draw loans. They create the second draw loans altogether, but the changes to the PPP program in general can affect both. Interestingly enough, they did reopen. So if you never had a first draw loan, you could actually get a new one now, again, before March 31st. So some of the changes that are interesting, especially those of you who don't have, for example, the forgiveness yet, or haven't even applied for forgiveness, they've changed the covered period. Before, there was a problem that if you were a business and you were trying to pick in between the 8-week and the 24-week covered period, you may have had, for example, a reduction in workforce right towards the end of, let's say, 24 weeks, long after you've used all the funds, but it could have affected your forgiveness. Now, the new Economic Aid Act changes that, so you can pick any period in between 8 and 24 weeks. It's no longer that rigid either 8 or 24 weeks and nothing in between. Now you can actually pick a period in between those two to call that your covered period. And your forgiveness and your loan amount and all that stuff will be based on that covered period.
It's no longer an either or. You have a little bit more flexibility on defining your periods.
Yeah. They also changed the definition of payroll costs somewhat. So they included basically group life, disability, vision, and dental insurance as part of payroll costs. If you all remember, those were not included previously in previous definitions of payroll costs. By this expansion, if you were possibly a little short and you haven't applied for forgiveness yet, and you're possibly a little short, this could put you over the edge to get full forgiveness of your first PPP loan. And it's also it's also an expense you can use as part of the second draw. Is all these, other insurance benefits other than medical.
So Joe's about to get into a few of the expanded eligible expenses, but what's important to understand here, you may recall, I'll take you back to several webinars ago, where we talked about the different buckets, if you recall, of expenses that you could use for purposes of ultimately using these expenses properly to get forgiveness. What this second round did is increase a bit of the ability of using them for different expanded expenses. It doesn't eliminate the 4 buckets we talked about in the prior loan under the CARES Act. It expands it.
Yeah, so the one we just talked about expanded the payroll cost bucket to include some additional things. Again, that helps increase what you can use it for. There's also a list of eligible expenses, basically new buckets that were created here.
And these were not in the first round of the first draw of PPP loans. This just came out now as part of this Economic Aid Act as a new ability to use those proceeds. It didn't come out, it wasn't listed in the first act.
Yeah, and some of these things were, things that people asked us about constantly. Hey, can I use it for example, PPP purchases, PPE purchases? And the answer is now, yes. The 4 general buckets that they added boil down to what they call operations expenditures. And that, in the detail, it's basically, hey, cloud computing, getting new software to work remotely, remote services, those kind of things. That is included under operations expenditures. Another one is property damage costs. This was a throw in there. And basically, hey, if you had uninsured property damage due to vandalism, looting during the civil unrest in 2020, in the summer of 2020, you could actually use your PPP funds for that, the second draw and now the first draw. So it expanded that. Another one, worker protection expenses. This is the PPE, the plastic, plexiglass shields, that kind of things, those that you needed to comply with state, local, CDC guidance on how to protect your workers. Those expenses are now included as one of the buckets that you can use the second draw PPP and going backwards, the first draw PPP loans proceeds for. And lastly, supplier costs. This one I would expect a little bit more to come out on what exactly this means, but they stated it as payments to a supplier for goods that are essential to the operations. I can't give you a great example here, but I know, for example, a lot of car dealers or car manufacturers have shut down because they didn't have microchips that they needed. So I would assume that under this kind of scenario, that is what they're talking about. Something that you had to buy, you couldn't not buy because it was essential for your operations, but you were short on cash during that pandemic. now you could have used that. Again, I would expect more, some more information on that topic, but it is pretty much a big thing that everybody needs. I'm sure everybody has some kind of required item that they buy from a supplier that they need to keep open. So this could greatly expand the category.
And hopefully the FAQs that come out in the as soon as feasible, which is what the SBA is saying, does give a little bit more examples of how that operates. But you can get the theme of what's going on here. They're expanding these eligible expenses. In the first CARES Act, when the first draw of the PPP loans, at that time, a lot of these expenses were still being developed and they weren't really out there incurred by all these businesses. Not surprisingly, under the Economic Aid Act, you're starting to see these as qualified expenses, eligible expenses rather, that under that from a timing standpoint are ripe for being considered an eligible expense. We're now to changes the tax treatment. This is an important development, and it's something that caused a lot of controversy, because you would remember one of the big issues here is whether or not the expenses for use of the PP funds would be deductible. It came out that the administration, and remember, you may recall Mnuchin came out saying that was not the intention of these to be deductible. What this act did, and this is a major benefit to employers, is that they made them deductible. So not only can these expenses be forgivable, assuming that you qualify with those respective conditions, but now they can be deductible. And this is something very important to work with your tax and accounting consultant. Good.
Yeah, very briefly, originally, as part of the first PPP loans, the legislature was very clear that, hey, this is not going to count as income to you. Even if we're forgiving it, we're not going to count it as income. Now, the problem with that is the IRS said, okay, great. But if you use that income to pay for some expense, since it's not income, you don't get it deducted. So basically, all those expenses that you would normally take at the end on your tax forms, you wouldn't be able to take them if you use PPP loans. So it hedged the benefit of not getting income from it because you couldn't use expenses. Now with this new law, they say, you get to use all the expenses and you still don't have to declare as income. So your year-end finances, you're gonna have a lot more expenses that you can use. And frankly, your tax return will probably look very regular, although your basically net cash you're gonna have at the end of the year is gonna go up significantly.
Right, because you got a forgivable loan that, assuming you get forgiveness, is money that is not considered income, yet you have these expenses that you can now expense away in your final tax assessment. So, all right.
Okay, moving on.
Forgiveness. So before we move on to forgiveness, that is the crux of a lot. Now, there are a lot of subtle issues in the IFR. What we wanted to do in this, and we'll get through, I see in the chat room, there's a lot of questions and we'll get through them. But that is the crux of the IFR up until forgiveness that's in the IFR, and a lot of issues. There are some subtle issues that may apply depending on your industry. But as you could see, they piggybacked quite a bit on the CARES Act and the first draw of PPP loans. So let's move on to forgiveness.
Yeah, so basically it's going to follow the same general process as the original PPP loans. And that does involve the same potential reductions. Again, if you let go of employees and you reduce their salaries between the covered period and a prior period, you can get your forgivable amount reduced. Just exactly the same way in the first PPP loan. So that is unaffected. So you would still have to maintain your workforce. You would still have to maintain them at pretty much their regular wage, although there is 25% you can reduce an employee and still be covered. The exclusions also apply there. So if they, for example, resign or they refuse to come back, those still are carved out, and you don't have to worry about those.
So you'll remember in the in the prior webinars, we talked about the FTE analysis. Remember that? And the reduction by more than 25% that we talked, that stays the same. That has not changed.
Yeah.
Except for the fact that now you have the 8 to 24 week covered period for purposes of your, of your assessments, however that's plugged in there. But the analysis there has not been changed.
And also they have tried to, again, reduce the paperwork and reduce the burden on businesses applying for forgiveness and application for these loans. So one of the things that they did is basically the forgiveness application for loans up to $150,000 has been super simplified and is expected to be basically 3 certifications and a signature. So it's going to be a very quick application, again, for under $150,000. they may not even require or even ask for supporting documentation there. It may be down to just literally certifications. For example, my payroll was reduced by, sorry, my gross receipts were reduced by 25%. I use this money. I kept all these workers. Thank you very much.
And it's not surprising that you see the government, and this happened under the CARES Act. Remember, there was that $2 million threshold concerning the audit issue and who was at risk of being audited and so forth, depending on a threshold. Now they're setting up a threshold of 150 and saying if it's up to 150, the smaller the loan, the more rights you have and simplification that you have.
Right, but I keep in mind though that you first have to apply with your bank, right? And I think in some cases banks haven't exactly always been following exactly what the government says for whatever reason. So, just be aware that just because the law says one thing, the banks may require additional information and make it a little bit harder for you to apply. Whether they can do that or should be doing is a different question. But we have seen some banks asking for stuff that was really not within the forgiveness program. So just keep that in mind as something that may come up.
Carlos raises an excellent point, and the hope is that the banks listen to this IFR, because when you read the IFR, it really has a tone of simplifying it for the ultimate borrower. But ultimately, we'll see how the banks respond. But Carlos, a great point.
And that is probably a big part of the reason why they pretty much adopted the same things from the first PPP loan, continuity. So they don't want to reinvent the wheel here. They want to have something that the banks have already done, are at least somewhat familiar with, so we don't have to start up a whole new process and have those growing pains.
Yep. All right, that's it. That's the main changes that we went through with the Economic Aid Act, dealing with the second draw PPP loans. I see several questions in the chat room. We'll turn to that at the end. But for now, I understand that several of you had some miscellaneous questions, and we're going to turn to that quickly, and then we'll revert back to the second draw PPP loans and the actual question and answer session at the end. So I'm going to turn it over to Joe to go through some very brief miscellaneous updates. We'll start with updates on paid leave and the FFCRA. Several of you had questions about how it will continue going into these next few months.
Yeah, and very simply, the Economic Aid Act did extend the paid leave benefit for employers, meaning you can still get the tax credit up through for leave up through March 31st, 2021.
And we're talking about the emergency paid sick leave and the Emergency Family Medical Leave Act. Those are the e-leaves that we talked about in prior webinars.
Yeah, now interestingly, they did not extend the requirement to offer it. So it becomes a purely voluntary procedure for employers whether or not to offer it. But if they do offer it, they can get the tax credits and they can get that benefit.
And that applies to the current EPSL and EFMLA rules.
Yes, so there is no expansion of the amount. So for example, the emergency paid sick leave, it's still capped at 2 weeks for the entire pandemic. So there's no new bucket. They can't take 2 weeks in 2020 and now 2 weeks in 2021. It would be limited to the basically 2 week equivalent of whatever they took. So they took 1 week last year and they take another week this year. That would be okay, but you cannot. It does not create a new bucket.
And it's obviously it's only available, these credits, through March 31st, 2021. Okay, now we're going to go quickly into another topic that's been very hot out there, are vaccinations. So whether or not there's any guidance on mandatory vaccinations, and actually there is some guidance, and we'll get into it briefly now too.
Yeah, very simply, the EEOC has issued guidance on how they're going to handle, hey, can you make employees take a vaccine? Generally, the answer is yes, you can make them. However, there are exceptions and there are different laws that can regulate whether or not an employee can be basically either terminated or disciplined for not taking a vaccine. So the deal is that basically employers can require vaccine before employees return to the worksite if the failure to be vaccinated constitutes a direct threat to other employees in the workplace. Now, again, direct threat to other employees in the workplace it's a term that has a lot of meanings. But the CDC and the EEOC have basically decided that, hey, if you're an employee and you're in a workplace setting with other people, that at this time, because of COVID-19, can constitute a direct threat. So they've pretty much given them a pass on whether or not an unvaccinated person with could be a direct threat due to COVID-19. So they have said, yes, it's a direct threat. At this time, again, this may not be the case in 2 years from now, but at this time they said, yes, it's a direct threat. Now, importantly, there still is a requirement of the workplace. So whether or not they're in the workplace, if you have a remote worker, for example, that is going to continue to be remote, they are not a direct threat to anybody in the workplace because they don't have access to anybody in the workplace.
So you need to do a case-by-case analysis of direct threat. Is your business environment creating a direct threat? So it's important to get proper counsel there.
And this is really, guys, where your HR manager can really help you out in determining, writing a policy, putting together a policy, and obviously they'll work very close with Carlos and Joe on writing the policy. And it's got to be, it's got to be very specific to your operations and very specific to how you operate. The other thing that I think is kind of difficult right now is that the vaccine is not out for distribution for the masses yet, right? So I think you got to be very careful in putting together a policy when really you can't even go out and get it unless unless you meet certain criteria at this point. So, definitely something to start thinking about, something to start, planning for. Your HR manager, your HR person can help you out with that. But there's still, I think, a lot of things out there unknown, and the vaccine is not out there yet for everybody. So it's kind of hard to make, tell your employees they got to get it when it's not available yet.
Thank you, Carlos. That's right on point. And so let's talk about the vaccination policy. So you got to keep in mind generally that when you deal with the vaccination policy, all those other laws about Title VII and not discriminating, no disparate treatment, no disparate impact, you want to make sure you do it in a manner that is done in a non-disparate, discriminatory fashion. So any required vaccination policy, however, must make exceptions for employees who cannot be vaccinated because of disabilities or due to sincerely held religious beliefs. So there is some more guidance out there on what you can, on what exceptions you make if you go down a required policy. Now, this is because we all know, just what I said earlier, ADA and Title VII still apply to the policy. And this is where Regis will do a great job at working with you, work through and say, are there any issues here that you can identify that could be problematic from an HR standpoint? The employer can request information. Now, this is important from the employee that's requesting accommodation, including the nature of the limitation or disability and the difficulty or issue that the vaccination will cause. But again, be mindful of HIPAA and other laws. So when you do it, tie it to the business and make sure that you don't exceed the boundaries of what kind of medical information you're asking. Now, as we discussed a second ago, it must be tied to a business necessity. So as an example, employees, like Joe said earlier, who work remotely do not pose a threat and cannot be required to be vaccinated. So if you have a workplace where there's real exposure there and it's a direct threat to others, that's a different story than somebody that's working remotely at home. Now, due to the exceptions to a mandatory vaccine policy, making a policy that encourages but does not require vaccination is an option for employers. And for some, that might be easier to administer, especially if they're in a situation where there are real exceptions that could apply. So you should assess what best fits your needs as a business, like Carlos Saladrigas just said a second ago. Let's move on to another hot topic these days. It's called I-9 forms in the state of Florida.
Yeah, very briefly, we just want to make sure you're using the latest and greatest I-9 forms. The I-9 form changed mid last year, and to be honest, it was a tiny change. Basically, the dates in the top right and the bottom left corner changed. Otherwise, the paper form was identical, but technically, I-9 compliance is very strict, and theoretically, you could be out of compliance if you use an older form. But again, all new employees, they should be using the form. The latest form has a date, an expiration date of 10/31/2022 in the top right corner. Now, also in Florida, as of January 1st, a new law passed, and it basically made the federal rules mandatory in Florida. So now Florida itself, a state, requires you to keep I-9 forms, and it even goes a step farther and requires you to keep the supporting documentation, which under federal law was an option, but Florida requires you to keep the supporting documentation as long as you keep the I-9 forms. Now, alternatively, Florida can say, okay, just use E-Verify instead. A lot of businesses aren't set up on E-Verify yet, so that could be an option. Once you do start using E-Verify, you have to do them all through E-Verify. But either way, they'll still be getting I-9 forms and keeping them. But Florida does like the E-Verify platform. But if you don't use E-Verify, you still have to keep all the I-9 documentation longer than you would normally. So it's a little bit more strict than the federal rules, but very similar. Lastly, if you're a Florida public employer or a contractor similar to before, now you are required to use E-Verify.
So if you're a public employer or they're private contractors, you must use it. And the threshold was above where we talked about the E-Verify and using the I-9 forms above. You have to maintain the copy for 3 years. So 3 years is important to maintain them. As you know, under federal law, it's optional. Now under Florida law, you need to maintain them for up to 3 years.
Yeah, and that's the copies of IDs and things like that that would support the I-9 documentation. Now you have to keep it. Under the federal law, you weren't actually required to.
Okay, that wraps up the presentation. As you know, we divvied this up into 2 parts, which is the second draw PPP loans under the Economic Aid Act and these miscellaneous issues. I'll turn it back to George and Carlos if they want to say something prior to getting to the Q&A, but we are ready to start discussing the Q&A.
Go for it.
All righty. So if everybody can go to their chat room, we have several questions here. Yeah. First one is we started a company that started operations on January 1st, 2020. We applied for and got a PPP loan. Since we don't have any quarters to compare in 2019, what can we do? The actual IFR does address that. I'll have Joe pull it now, but they actually do talk about you're allowed to apply for the PPP loan now if you started a business in 2019. They even have a formula for you in calculating your payroll costs. You know, under the standard, under the default that we spoke about earlier, generally, except if it's carved out under the IFR, it's the 2019, 2020. Here, there's a formula that goes into that where you take the total number of months and you divide it, and we'll get you that formula and read it to you in a second. You got it?
I don't have it handy, but yes, as long as you were in business prior to February 15, 2020, you can apply. The 25% reduction threshold you're going to use, I believe, is from the first part of the year, very first part of the year, compared to later quarters. So we mentioned earlier, there is some flexibility there depending on when your business opened. You don't have to go exact quarter, first quarter, or second quarter. There is some flexibility if your business opened, in 2019 at some point, or even in the very first part of 2020. So yes, you could still be eligible. Talk to your accountant about the exact calculation, but there is a pathway for you to get it.
There is a pathway and there is a formula for you to calculate your payroll cost that is distinct from the 2019, 2020, 12-month periods that we talked about earlier. So it's specific for those companies that formed in 2019 timely. And if you're in January, you're timely. In 2020 timely. If you're in January 1st, 2020, that's timely. Just want to make sure you satisfy all the other criteria, which includes the 300, up to 300 employees and all of that. But the actual document does get into the payroll cost calculation, the period of time, and it has some exceptions to it. So if you're seasonal, if you're a startup business, etc., the IFR goes into that and make sure with your CPA you work through the exact calculation of how you calculate payroll costs, because it deviates from the standard 12-month period.
Yeah, there's both. There's the 2 calculations. One is the payroll cost, and one is a 25% reduction.
Right.
So they have a way for you to calculate it based on if your business was open later. So if you are January 1st, 2020, you should be okay, and you can still get the second draw PPP loan, assuming again you meet that 25% reduction based on the formula that they give you, which I believe is related to basically your first couple months compared to later quarters. So they do want to see a reduction, but you may be able to use basically the first 3 months, 2 months of 2020 and compare it to later quarters.
And we'll get the exact cut and paste language for you in a second. All right, so those are the first 2 questions in the chat room. Next question, to calculate the 2.5 times, I will need to cap employees that make 100,000 if you're a small business, 150,000 if you did not apply for the first loan. Would you be able to qualify for the second loan? So the first issue here is all those caps that we talked about under the CARES Act and the first draw PPP loans still do apply. So when you work with your CPA and tax consultant, it's important to know if you're a partnership, if you're self-employed with employees or without employees, and dealing with that cap and whether or not you go over or under, it is very entity specific. So the caps, all the caps still apply that we were talking about, the $100,000, but check with your CPA as we discussed, because depending on your choice of entity, you may have a different analysis under the schedules that you report from a tax return to look at and refer back as you assess those caps and so forth. So the other issue here that we talked about a little bit at the beginning, and I think this is good for Joe to clarify. This talks about if you did not apply for the first loan, are you eligible to apply for the second loan? This will clarify a little bit of what we talked about at the beginning. So go ahead.
Yeah, so the answer is no, but the first loan has been reopened. So you can actually apply for the first loan. The act is not really, it's kind of silent on as to whether you can apply for the first loan, spend all that money, and then immediately apply for the second loan. It doesn't say either way whether or not you can do that, but curiously, that might not work timing-wise either way, but there is that possibility. But again, you can reapply or apply for the first time for the first draw PPP loans. Again, you're still using all those terms that the original PPP loan with some modifications, but you cannot apply directly for a second PPP loan. One of the requirements is you have to have basically use all the proceeds from your first PPP loan before you can get the second draw.
Yes, so let's go back to the first question concerning an entity that was not in business in 2019. And here's the language. We got it from the actual IFR. So let's talk about the gross receipts. If the entity was not in business in 2019, but was in operation, like Joe said, on February 15th, 2020, and had gross receipts during the second, third, or only with respect to an application submitted on or after January 1st, 2021, fourth quarter, so second, third, or fourth, because we're now beyond January 1st, that demonstrate not less than 25% reduction from the gross receipts of the entity during the first quarter. So Joe was right. You have to compare it based on that quarter by quarter and that quarter to quarters analysis. And in addition, if the entity was not in business during the first or second quarter of 2019, but was in business during the fourth quarter of 2019, had gross receipts first, second, or third, then had less than 25% during the third or fourth quarter of 2019. I got it. So it's that analysis of quarter by quarter. So gross receipts during the second, third, or fourth, 25% cannot be less than a 25% reduction from gross receipts in the first quarter. So not to confuse you all, second, third, or fourth compared to the first quarter. Okay, I think that answers that issue.
Yeah, that's actually directly from the act itself.
Okay. All right. Let's go back to the chat room. And remember, if you closed during 2020, then you're not, if you closed completely your doors, then you're not eligible to permanently, you're not eligible for this second draw loan. All right. Does the major change to tax treatment apply to the initial PPP loans too? The answer is yes to that. And that was clarified. I stated earlier, Mnuchin, at first, we don't think that it was likely the intended effect of the original CARES Act by the Trump administration. At least Mnuchin made it clear that that was not the intention, was our understanding. But ultimately, it did make it, the government did make it clear that that major change to tax treatment, which I believe you're referring to the deductibility of the expenses, applied to both the first draw of PPP loans and the second draw of PPP loans. But when do you have to apply for forgiveness on round one and two of the PPP loan? It's a very, very good question. Currently, some banks are not even encouraging or taking forgiveness applications. They're discouraging it rather. And so the actual deadline for forgiveness under the PPP loan, we did not see it in the IFR. The second loan, the major deadline that they put in there was that you have to apply for the loan by March 31st. We hope and suspect that under the FAQs that are forthcoming in the coming days, that they'll provide guidance on the expiration date. But we did not find an expiration date on an expiration date for the first PPP loan nor the second PPP loan with this IFR. Our recommendation, of course, is to stay in regular contact with your bank, who is the one that's going to be processing the forgiveness application. It's a good idea to start asking them, hey, and start sending emails to them and letting them know that you're ready and willing at the right time, that you're ready and willing to apply for forgiveness, and what they're doing. We, for instance, we saw a bank send an email and said they did not want to they discouraged PPP loan forgiveness applications because they thought that this was ever changing and that they wanted to see what happened with this economic aid recovery, this new economic aid act. So banks, some of the banks are purposely slowing down on the forgiveness application, but our recommendation is to encourage communication with the bank and document that you're attempting to stay on top of that expiration date. But there is no expiration in the IFR.
Yeah, similar to the first round, the only expiration dates that they put were expirations of the application on the form itself, is the expiration of the form. So we don't have a deadline yet for either forgiveness application. And you can imagine it's got to be at least 24 weeks after March 31st, because March 31st is the last day you can get the loan, and then 24 weeks would be the covered period. So we're talking about it's going to be probably towards the end of the year if there's any deadline.
Okay, next question. How does a business sign up for E-Verify?
It's a pretty simple process, frankly. As I mentioned before, once you sign up, you have to do all your new incoming business, all your new incoming employees have to be run through E-Verify. But there's a process, it's online. Frankly, it's pretty simple. You follow a couple steps and it'll walk you through it. The trickier part is once you're actually signed up, they do have tutorials and they show you how to use the program itself, but it is a web-based application, and that's how you would open a case. And basically you're going to transfer that I-9 information and you're going to put it into this web-based portal, and right away they're going to give you back, well, maybe not right away, but shortly thereafter, they give you back if there's any issues that they clear it, or if there are issues, they may ask for more information. But it's a very simple web-based process.
And Areli and everybody else, we can definitely help you out with that.
Yeah, I think Regis can help you out.
Just reach out to us and we'll help you out with that.
That's absolutely right. All right, so has the payroll cost definition changed when calculating the 2.5 times loan amount? Can you confirm what's included? Yes, it has changed. Now, the original definition that had the payroll cost, which included bonuses, as you remember, you talked about bonuses and salaries and so forth, that all still applies. And there's a very specific definition on all of the categories. What they did here, and I went back on the webinar to go back to the page that Joe had spoken about earlier, and what they added is the definition of payroll cost has been expanded to include life, disability, vision, and dental insurance, on top of all of the other payroll cost related expenses, which included, you all remember, the salary, the bonuses. It did not include, of course, some of those tax related matching and things of that nature. They carved all of that out. So the same analysis under the CARES Act applies. You just got to piggyback and add group life, disability, vision, and dental insurance. Okay. If you have a company with two separate state locations, does the $2 million loan cap apply per location or per company? Well, the gross amount applies for $4 million to the company, to the exact corporate, the exact affiliated corporate structure for the $4 million, and each location is capped at the $2 million.
Yeah, generally, I guess it would depend on what kind of company it is, because as we know, restaurants and hotels, you know, the NAICS 72 entities, they are allowed to basically get it per location.
Right.
Otherwise, generally, they are not allowed to get a per location if it's all one company. So it would depend on what kind of company you have. But generally, one company gets only one loan. But if you have one of the allowed companies, again, NAICS 72 begins with 72. Then you can get it per location, but you're still subject to $4 million tops.
Yeah, and I want to talk about that because it's important to understand that the per location analysis of what we're talking about apply to the NICS 72 category, beginning with 72 category. If you're not a hotel or a restaurant or a 72 category, you don't get that benefit of having a separate location, a separate EIN per location piggyback of loan amounts. In other words, you are still subject to the cap of 2 million, unlike under the CARES Act, which had 10 million. If you and then what the regulations do, if you're part of a single corporate group, no matter what category you're in, you have the $4 million cap. So the $2 million cap is a cap under the Economic Aid Act for the non, we'll call it NICS 72 or otherwise excluded entities. That's the 2 million cap. The 4 million cap is when it regulates businesses that are part of a single corporate group to receive no more than 4 million. And you may have a single corporate group across multiple locations.
Yeah.
And I just pulled up the actual webinar slide that we spoke about that a little bit earlier. Go ahead, Joe.
Yeah, and of course, if it's one company and let's say you don't qualify under the NAICS code, you can obviously lump those together and get, you're still under 300 employees. You can lump both locations' employees together to calculate the payroll, and you can get the maximum amount that possible with using the combination. But you just can't get a separate amount to try and get around that and get more money than $2 million.
Okay, when will the applications open for the second round of PPP loans? They've already started it at the local community bank level, and my understanding is now they're launching it already, and it should be forthcoming from the banks any second now. Our banks have not opened for the most part. I think they're still preparing. Some banks may have opened, and some entities are moving forward.
Yeah, as part of this Economic Aid Act, they specifically wanted to open it first to local community banks, especially in hard-hit areas. They did tailor to that. So those banks actually could have started taking applications, I believe, on Monday.
Right.
There's supposed to be a little bit of gap in between that and just the regular applications. We assume that it's going to be probably at least Monday before they can start applying for the second draw loans, unless you're a community bank. So we would expect that, but that date is not written in stone.
Right, and they had come out with some guidance on this and some specific exceptions as to who can get some benefits on early application and so forth. Okay, I have not applied for forgiveness on the first draw. Can you still apply for the second draw? Great question. This is an issue that we clarified at the beginning of these FAQs, but a good, these question and answers, but a good topic to discuss now. You clearly can't if you got a loan and you didn't use the proceeds of those loans prior to the second loan. And Joe will talk about if you haven't applied at all.
Yeah, applying for forgiveness is actually not required. So the only requirement is that you use all the proceeds of the first one. So many businesses we know have not applied for forgiveness, but that is not any kind of requirement. So the answer is yes, you can still apply as long as you use the proceeds of the first loan, even if you haven't applied, even if you're not ready to apply or anywhere, or you're still getting your paperwork together, you can still apply for the second draw loan without submitting or being ready to submit a forgiveness application for the first one.
Right, and then check with your specific circumstance, as with respect to whether or not if you qualified for the first loan and you didn't apply, and whether or not if you're a new business in 2020, drill into this IFR, because there is some good guidance out there as to whether or not under your specific circumstances it will or will not apply. All right, next question. I just spoke to my bank, and the rule for accepting new PPP loans has to do with the size of the bank. Smaller banks are open now. Those $1 billion to $5 billion is next week. Pretty consistent with what Joe said just a second ago, what I said, where they gave it basically, they opened it up early for community type banks and so forth. Are law firms excluded entity for the second draw of PPP loans? I think most of the country would probably want them to be excluded from the second draw of the PPP loans, but the answer is no. You're not excluded from applying for the PPP loan if you satisfy the less than 300, the up to 300 employees, and that you had a 25% or more reduction in any given quarter when you do the comparison and so forth. So I was being facetious because I'm actually grouped in that class of law firms.
Yeah, and just FYI, there is that ban on basically the political lobbying activities. So, I mean, there's no ban on being a law firm in general, but if by chance you are a political lobbyist, yeah, that could be problematic, but it doesn't have anything to do with just being a law firm.
That's a great question, because many law firms do political lobbying. So whether or not that will ultimately be barred, it's a good, hopefully the FAQ will clarify some of that. If the law firm does just regular law firm work, but combines it as part of its political lobbying, or does the law firm have a separate entity that it owns? How does that affect your ability to apply if you are involved in the political lobbying arena, which many law firms are? Okay, if you have not used the first draw 100%, it is my understanding that you can apply for the second draw. but funds will not be dispersed until the first draw is exhausted. Is that accurate? Well, you do have until March 31st to apply. Good.
Yes, I think that would be, I don't believe you can actually apply, but you still have time to use that money and apply. I'm not sure, you know, I haven't seen an FAQ on that topic exactly, whether you can kind of hold your application after you apply until the funds are used in the first instance. I think it would be pretty hard right now to have not used all the funds. Remember, this is not, it's not that you still have some money in an account. If you have all expenses that are allowable expenses, even if you didn't, for example, take it out of the same account, it's considered to have used those proceeds. So the answer is, I don't believe you can apply, so you can't get a new loan code until all the funds from the first loan have been used.
I think the guidance you have in the FAR is IFR is as follows, and I suspect this will be part of an FAQ in the future. But what they address in the FRI is as follows: that you're eligible for a second draw PPP loan only if you have 300 or fewer employees and experience a revenue reduction 2020 relative to 2019. Described further. It says this. In addition, it provides that the loan may only be made to an eligible borrower that, one, has received a first draw PPP loan and has used or will use the full amount of the first draw PPP loan on or before the expected date on which the second draw PPP loan is dispersed to the borrower. So there is a little bit of guidance on that, you know, so it does sound like you may very well be open to getting the actual second draw, but under this literal language right now, if you haven't used it and you don't plan on using all of the monies for those specific categories, which I agree with Joe, may not be that many businesses out there in that position, then you may not be eligible. But if you will be using it, you plan to use it, you know, you still have till March 31st to apply. So there is some guidance there. It wouldn't surprise me that there's a little bit more of an FAQ on this issue and so forth.
But basically, you're not going to get the money until the first funds are completely used.
That's right. So you have to. The purpose is that they want to put this money back into the economy and keep employers employed, and they want you to use it, or want you to have used it already, or that you will use it in the future and so forth. So, okay, let's go back. I think that is the last question. I don't think there are any more questions.
All right, that's it.
Okay, I'm going to open it up to Carlos and George, and unless there are any more questions, I think we've answered them all for now.
I want to say thank you again, Carlos and Joe. A great presentation. I think we covered a lot of different stuff, even some stuff that was not related to the new round and so forth. Thanks to our clients as always, guys. We really appreciate everything you guys have done for us and so forth. We wish you the best. And again, we will remain open. Any questions that you come up with after this, please don't hesitate to let us know. Your HR team, your payroll people, myself, anybody, just go ahead and reach out to us and we'll be sure to get you an answer right away. George, anything else?
No, I think that's it. Just as a reminder, we did record the presentation. We will go ahead and send a newsletter with the link to view the presentation in case you want to reference it in the future. And then as well, for anybody who maybe wasn't able to stick around for the whole thing, that will be available. Again, just as a reminder, if you have any questions, go ahead and email us or speak to your HR rep, and we will get that answered for you if think of something after the call. Thanks everyone for joining. That's all I've got.
Thank you. We can't thank you enough. Thanks again for calling.
Thank you, everybody. Thank you, Carlos and Joe. Take care, everybody.
Bye-bye.
Bye-bye.
Thanks.